GM, welcome to the weekly outlook. This is where I do a high time frame breakdown of the markets to set you up for the trading week ahead. Right now, we've got Bitcoin rallying, we've got altcoins rallying, especially meme coins. We've got potential trends in the macro environment. So let's dive into all of that. We'll go through the leverage positioning on Bitcoin and altcoins to see how sustainable these rallies really are, whether they're just short squeezes or not, and also catalysts and risk. Of course, we've had that US Venezuela conflict, or let's just say the president got seized pretty quickly from Venezuela, and that's going to have implications on the wider market, especially oil, gold, all of those macro assets. And of course, in crypto, we're already seeing the reaction to it. So we'll dive into that since everyone on Twitter has turned into a Venezuela expert, an oil expert. So we'll go into the reality of what to actually look at as traders. Remember, we're not experts on this stuff, so you don't need to become one, but you can make money from it if you do just focus on the trading. So let's get into it, starting with the market. So Bitcoin on the weekly time frame. As you guys will know, I've been reallocating my long-term portfolio from cash, which I sold in this distribution over here, back into Bitcoin. So 25% allocated so far, which I'm going to dive into further in Trade of the Week. So make sure to stay tuned for that one. But essentially, what I'm looking at here is, do we get some sort of short squeeze on Bitcoin since we've had a strong week here? We've got, of course, all of these inside weekly candles, as you can see by this blue box. And you guys will know these inside weekly candles where you have multiple in a row. Now, bear in mind, on a lot of exchanges, this was a candle which actually wicks down to over here on other exchanges. So these are weekly inside candles. If I look at something as simple as, let's say, OKX over here, you'll notice that on this chart, weekly candle, the wick was much lower. So then you traded inside it for several weeks in a row. So you guys get what I'm talking about here. This then leads to expansion moves because volatility dries up. And that expansion move can go both ways. You also have this example here of a weekly candle where we trade inside candles. So I've been through that already this week. Make sure to check out morning markets if you haven't already. But point being is, if we do continue this squeeze upwards that we've been seeing, then potentially, if it is just going to be a short squeeze, I'm looking to take profits, which is going to be a sizable amount since it is 25% of both my long-term and trading portfolio put together. As you guys will know from the Discord, you get all of my updates there and my allocations, what I'm doing in trades. So there's potential for me to actually just turn it into a trade if we do see what I want to see, which would just be a squeeze up rather than a slower recovery. So it's really two paths that I see here. If we break to the upside and just go on a violent short squeeze to wipe out anyone who got late into hedges after that October the 10th breakdown, they're getting their kind of conviction tested. If we do see that squeeze, that eventually likely then at least leads to a retest, if not new lows, I want to potentially look at taking profits up at this previous distribution zone, because that will lock in 20 or 30 R for me with how big this position is so far. So that, is some people's yearly returns. So I'd be a fool to not consider it if I do see the signs of a short squeeze, which we'll dive into further in leverage positioning to see if it is a short squeeze or not by the open interest. But what I'd want to see that actually wouldn't lead me to taking profits is more of a slower recovery, something like this. Then I would actually be less inclined to take profits because that's more likely to actually lead to a move to the highs. It's more sustainable as you're not necessarily squeezing shorts. It's actually more indicative of demand slowly accumulating Bitcoin, which leads to, of course, the biggest markups when you have these big accumulations that go sideways and don't squeeze up rapidly. So that's the rationale behind it. Price behavior is very important, you guys will know. So I'm looking at on Bitcoin, but we are squeezing up, and it's exactly as I actually mentioned on the last couple morning markets videos. So you've got these equal highs on Bitcoin. You've got the 2026 open. I said you often see these one directional moves on the yearly open because people are allocating for the year. And if they think it's going to be a bullish year, 2026, then people will get long at the start of the year. And that's why you see different flows at times. And it is unique to January the 1st, that opening week. So also seeing rallies across meme coins, which I'll dive into further, as I know Pepe's definitely been rallying a lot more. So that gives us some more insights into this Bitcoin rally. But first of all, sticking with Bitcoin, if we take a look at the charts on lower timeframes here, so we've cleared these equal highs. Now, in the trading week ahead, we're really just looking for those equal highs to hold on any retests if we do get a retest. I know the 4-hour, 12 and 21 EMA bands, they've been holding on retest. So this has been our trend support. So watch for that to continue. If these bands keep rising, do we dip into them? And does that then lead to new highs? That's going to be trend respect, as we've seen once and twice over here. So watch for these bands to continue providing support if we are going to hold in this area and continue trending up, and watch those equal highs. So that's the zone where we had all of this liquidity over here, which we've now finally flipped between 90.2 and 90.6k. Stay above that, and I think we're heading towards the next equal highs over here at 94.2 to 94.5k. Because there's really no reason why Bitcoin can't rally here, especially when you had for so long this horrible low volatility price action. Sentiment on crypto has been absolutely awful. Everyone's watching silver, gold, and all of this stuff. And when you take your eye off the ball, your eye off the asset at the exact time is often when it's then going to go into its exciting and actual expansion move. So it definitely has the recipe to continue on to these equal highs. That's why I would not be surprised at all if we do see a move up there. And don't get me wrong, this move could have at the same time been to the downside. The point is, an expansion move where everyone's taking their eyes off crypto is actually quite likely, considering everyone has taken their eyes off it. So it's undercrowded. So flipping these equal highs is a good sign, as I mentioned in morning markets. And I expect that to lead to a move to these equal highs at 94 to 94.5k, as long as we can stay above them. And bears, they only really get in control if we now lose the 2026 Open. So you have a clear invalidation TA wise. If we go below this 2026 Open now, then the start of year rally is probably off the table, and we're actually much more likely to go into a breakdown, which you can then look for shorts on. And this is actually a really important point, because a lot of people I see are shorting this rally. It's absolutely crazy. Like, why would you short this slow grind higher since the 2026 Open? Because this can continue on much higher. Why not just wait for the 2026 Open to clearly break and then short the next leg? Get your bearish sign first. This is trend trading 101. Just like you get your bullish sign first, and then you can look for longs in the next consolidation or on the next breakout to trade leg 2. You don't have to trade leg 1 when you're trend trading, because leg 1 is just a guess. So, when you're shorting over here, just expecting leg 1 to be a V reversal rather than waiting for the clear sign of losing that 2026 Open, you're really gambling and fighting the market. So right now we're trending up. If we lose the 2026 Open, sure, we can open up for bearish moves to some of these equal lows which we built over here, but they're holding for now. And we are moving up now. And we are taking the upside liquidity rather than the downside liquidity. So play the markets as they come. We flip the equal high zone, and as long as that holds, should lead to a move to your next set of equal highs over there. And looking at that wider market, those next set of equal highs are going to be at the top of this blue box over here. So if we break and hold above these equal highs, then that can actually lead to even a bigger squeeze towards maybe 100k. Let's call that round area between 98 to 102 as a general zone where you've got these big weekly gaps that have huge inefficient price action over here. So, you've got a gap over here. You've got a gap really all the way up to there where we can really trade into if we do start getting above this blue box and going for a proper short squeeze. And again, sentiment-wise, it's very much wouldn't be a surprise to see a short squeeze in crypto, would it? With how bad it's got. And we are just bouncing from a previous accumulation zone that I've had marked out for months now. So it's pretty natural to see some sort of rally. That's why I accumulated Bitcoin for an average price of 84k, and why I'm still holding that. So in a very good position right now. And you guys in the Discord who've been following along are too. So If you guys do want to join the school, all you need to do is drop me a message on Telegram over here. We'll get you in. But markets looking like we're seeing that Bitcoin 2026 opening move so far. So expectation is for continuation higher. But we are also seeing altcoin rallies. So let's dive into that. Taking a look at all markets in crypto. So we've got Bitcoin, Ethereum, Pepe, and Total Free. Because if you look at it just objectively, you've got the 50-day EMA in purple on all these assets, and then the 12 and 21 EMA bands. Pepe's way above its 50-day EMA, whereas Bitcoin isn't, ETH barely is, and Total Free is creeping up. So it's starting to show signs that altcoins are actually outperforming right now. So is that a good thing? Well, on one hand, that could mean that we're actually likely to go for that short squeeze scenario that I talked about, and this isn't actually going to be indicative of demand and a nice bullish recovery that we all want as macro bulls, and it's more likely to then go for a sharp squeeze that ends up failing, and then who knows if that leads to new lows or if that can bounce and bottom out. But short squeezes, of course, we know they're not bullish in nature, but they can go higher, and they can, of course, lead to price going up. That's what happens. So altcoins outperforming Bitcoin do suggest that it's more likely to be just a short squeeze, unless we do see that recovery and we do see prices building. But we're seeing Pepe really taking off now on the weekend. It's running away here, and let's just dive into Pepe for a second here. So daily. Actually, let's start with a weekly. Let's zoom out. So weekly time frame. We can see on Pepe, you've had a beautiful bull market, and everything since December 9th, this weekly candle over here, has been the bear market. You got actually quite a nice mirrored image pretty much here of Pepe. So, is this the zone where Pepe bottoms out? No. Could it be where Pepe bottoms out? Yes, sure, but we have to see a lot more to confirm that. You'd have to see some recovery, some failure to really go lower, and then sure, that can build a sustainable rally, because again, that's cause and effect. It's a recovery. It's like this blue box over here. If we zoom in, you go sideways, cause and effect. That then leads to your big markup. So if we can see something like that on Pepe, where you actually don't go into just a violent short squeeze, and this isn't just people looking for exit liquidity and really just wrecking anyone who's shorted throughout this period after October the 10th, they're the people in danger right now. So, could we see a recovery? Maybe, but I think what's more likely is for this to just keep squeezing higher. It's really classic. You get 1 week, 2 week, and then really 3, 4 weeks, and then it's all done. That's the thing with these altcoins. You have a few candles, and then the entire rally is literally over. Once again, over here, you have really 1 week breakout, and then the rally's done. Over here, you have a 2 week breakout, then the rally's done. So it's one of those things on altcoins. It's the nature of altcoins. When you go into these big trends, they're over before you know it, before anyone can get on board. They're really just to squeeze shorts over here. But what you want to see is actually this chart to consolidate, digest the move a bit, and that can then lead to long setups where we can get on board for leg 2 on the daily chart, and targets can be, this gap fill over here, let's call it this low, this breakdown low. That can be the overall target if you do see consolidation, but often you don't get that. Often you just see a squeeze higher, and then that can be just it. So, it's really a wait and see environment. All we care about is, can we get a trade on at the end of the day? If we can't get a trade, what's the point? I mean, of course you do your analysis because you never want to miss out on the charts. You want to be prepared, but if there's no trade there, then it just is what it is, and you have to move on and let the charts cook. There's no need to FOMO in here. If you have your setups, you should be long Pepe already, or planning your next long based on your systems. Otherwise, you just got to let the chart cook. And if it does give a nice consolidation, then great. If it doesn't, then sometimes you have to just move on. Not every chart's going to give you a setup, but what I was waiting for, which I mentioned on morning markets, was a retest of these 12 and 21 bands since we got above that 50-day EMA. But we've seen no retests at all so far, so haven't been able to trade this myself. It's just been a very violent short squeeze, and we'll dive into really the leverage data later on, and we'll get into the weeds on this move. But so far, it's an oversold rally. Pepe was massively oversold from top to bottom, as were all altcoins. So you're seeing a rally purely because it's down so much. And people are shorting at the absolute lows, which is the worst place to short. You should be short from way higher if you are, or at least closing out. So it's those late shorters that are just getting wrecked right now, rather than this necessarily being bullish demand. And again, if you do see consolidation, you do see reaccumulation, that can lead to bullish demand. That's indicative of it. But we haven't seen that yet. So to play the charts as they come, so far it's been a straight up rally, short squeeze. So you just trade your systems as they come. No signs of demand yet, but we got to wait and see if demand does eventually arrive. Because there are higher targets if we are going to see that demand, but more often than not, what happens with these altcoins is they just go straight up to liquidity, and then that's when they can either reaccumulate for higher, or it could just all be over and you start to fill in the gaps, and maybe it then goes later on and you build that base. So those are the scenarios that I'm looking at on Pepe. Overall, meme coins are outperforming Bitcoin. So there is some caution there when you're seeing that outperformance, and Bitcoin isn't really breaking out just yet, is moving up. So the question is this just a short squeeze? Which I think it probably likely is, but that can then, again, set up some really nice trades, really nice opportunities, as I've touched on at the beginning, to potentially take profit on some longs on Bitcoin and bank a bunch of profits in if we're not going to get that boring recovery. So rallies across the market, and this really is the story across all coins. Total free are above their 50-day EMA. Again, Bitcoin's not. So you're seeing that slight outperformance in the short term due to these altcoins just being so oversold. And total free shows everything excluding Bitcoin and ETH. So your coins like Pepe, Sui, they're all going to be encapsulated by this chart. And respectively, meme coins are running the most. But on average, altcoins, this is the index, are also outperforming Bitcoin. They're above the 50-day EMA, trending up from a really horrible period where they just bled lower endlessly, filling in this October 10th wick, but they came so close to it now that the risk reward for longs just became favorable and the risk reward for shorts became awful, so that you now just see a reaction bounce because it's simply so oversold. So a lot of work to do to say you're high time frame bullish again on altcoins, but it's a good start. Again, now we just need to see if this is going to be a short squeeze or an actual reaccumulation like one of these blue boxes over here. And that can then lead to your big markups. So that's what I'm looking at in the crypto market. ETH, not so interesting. So you can see ETH's weaker than total free. It's not getting the same bid as the rest of your altcoins. So I'd stay a bit away from ETH, to be honest. Struggling to get above its 50-day EMA while Pepe's soaring above it. That's everything you need to know. Don't chase laggards, chase strength. If you are looking for longs, you are playing these short squeezes, right? You want to chase the strongest moves, not the weakest moves on the long side. And Pepe, meme coins, they're currently the strongest. So total free dictates that. It's excluding Bitcoin and ETH. So you're seeing that altcoin outperformance against not just Bitcoin, but also Ethereum. So wouldn't have much interest in ETH over here. So altcoin rallies. Dive into open interest in about 5-10 minutes. I'm going to first cover the macro environment quickly. So seeing some breakouts across the market. Haven't took this long. It's just a position tool. You can ignore that, guys. But seeing stocks like TSM, so Taiwan Semiconductor Manufacturing Company, big AI stock. These guys are the manufacturers, the tools essentially behind NVIDIA and behind all of the AI wave. Breaking out now from this consolidation. So this is what you want to see across your trending assets. Is this beautiful cause and effect breakout? When we look at the stock market, wider market, what are we seeing? They're also consolidating, not breaking out yet. So it's going to be very interesting to see if TSM actually maybe shows the path for what stocks are about to do in the coming months. Let's see if this breakout holds, or whether this potential Venezuelan news actually leads to this being a false breakout and filling in. So I think this can really give you some insight into what's going to happen next in stocks. Are we going to see a wave of breakouts holding from this beautiful consolidation that we've got on them, like this path over here? Or if we see a false breakout like this path, then that can be indicative of the stock market in early 2026. Perhaps we're going to see a bunch of failed breakouts and actually local tops, if not tops, for some time on these stocks. So really watching this chart to kind of foreshadow what the rest of the stock market's going to be doing in January, in February, are the breakouts going to be holding or are they going to be failing? So I'm keeping an eye on this stock actually pretty carefully. And when we look at the wider market, so gold, which I'll touch on a little bit more later on, because this is going to obviously have a big reaction on the CME Open tonight. Gold's, of course, failed its all-time high breakout, false breakout below it. So this is an example of a failed breakout where we really need to get above this level over here, which I'll actually change to orange. That's the previous all-time high. Currently, we're below it, so we failed. Anyone who bought the breakout is underwater, so that leads to selling unless you can reclaim it and get back above like this overall orange path, which I'll change here, which is inside this blue box. So gold has likely priced in, as I mentioned, a lot of future fiat debasement, a lot of conflicts. A lot of people are going to be positioning for, potential tensions in the world right now, but markets are always forward looking. That's why gold actually had this move. And then later on, you find the news out later. So it's going to be interesting to see how priced in, this whole Venezuela-US conflict is, the implications around the US taking all the oil. What's that going to mean for global markets? Is it already priced in by gold? Is that why we had this move up for a breakout and then failure over here because it's a sell the news event? We'll dive into that a little bit more later on, but that's going to be very interesting. So you're seeing gold actually topping out here until proven otherwise, until we follow something like this orange path and at the minimum reclaim the previous all-time high, which we're currently below. So let's see where it gaps up or gaps down to on the CME Open tonight. I'd be watching that carefully. So let's actually dive into leverage positioning now. So looking at the Bitcoin open interest, looking at the altcoin open interest to give us a little bit more of an insight into the market. So if we go over here onto Bitcoin. So what we're seeing is Bitcoin's open interest is actually quite flat. And since that liquidation day, we built up, and that eventually led to the bottom, where we then have consolidated for some time now as open interest bled out. So a lot of these hedges, a lot of these shorts that would have built up in this downtrend, they have exited on some of this rally, some of this consolidation over here. And now we're starting to actually build positions. So it's going to be quite interesting to see if we do get above this high over here. Is it going to actually lead to further short squeeze? What are we going to see in terms of open interest? Is it going to fall back below this October 10th level? If so, that's indicative of this is just shorts getting squeezed out, or are we going to see a big rise in open interest and actually a bit of position rebuilding, a bit of life back into the crypto market? That would be much better to see. So let me show you guys what I mean. So if we have a move up over here and we see open interest not going crazy, but making higher highs and higher lows in line with price, that would actually be good. Because then when we eventually go for a retest of the lows, and of course open interest drops back, ideally it's coming to a higher low and we're building more interest in Bitcoin. When right now, the leverage has been absolutely wiped. And you actually need leverage in a bull market. You need leverage in an uptrend to make it go up. A lot of people have the misconception that leverage is just all bad, but every bull market's propped up by leverage. Open interest rising as the market rises is harmony. You need leverage in rising markets. Throughout this entire period, open interest was rising while Bitcoin was trending up. So, since the October 10th liquidation day, we of course saw a huge wipe in leverage. Tried to rebuild over here, but it was mostly shorts hedging. That's why price went down. And slowly we're starting to see this gradually grind up. So can price grind up as well? And can open interest grind up and show some interest pouring back into Bitcoin early 2026? That would be a really healthy sign for the crypto market, as everyone's got absolutely 180 sentiment wise. So would be the perfect time for it. And let's see if that can happen. So that's what I'd be looking for in terms of Bitcoin. But more interestingly, let's dive into Pepe. Look at the data behind this. So of course, October the 10th, that was a massive leverage flush from Pepe and every altcoin. They got absolutely wrecked as that wick just took out years worth of price action. Crazy event in crypto history. And that wick actually goes much lower, as you saw on some of the charts I showed you on TradingView. So what are we seeing here? Well, open interest since that wick has been grinding up slowly and slowly. So I think what's happening here on Pepe is all of this price action, let's say over here, right to where open interest tops out, has likely been short. It's likely been a lot of hedges here, building and building and building as price goes down, pushing it down, pushing it down. And now you're seeing a bit of a reaction. So what happened is price actually made a new low over here compared to the previous lower lows, whereas open interest didn't make a new low. Open interest made a new high. So shorts are not closing out as they should be and taking profit at the new low. This should be going down in a downtrending market if that is in harmony. So it's actually a divergence where you've got leverage increasing, open interest increasing, while price is decreasing. Price down, open interest up. That means the shorts in this open interest are actually wrong since they're not taking profit into that new low as you'd want them to. So when you now see price turning up, that's actually a sign that a lot of these shorts can get squeezed. Now, don't get me wrong. A lot of longs are going to be chasing this recent move now. As you can already see, you've got this big build up of leverage in this move. And that's going to be both longs and shorts, of course. That's what open interest is. But right now, price is rising. That's key. So it's the longs that are on side, not the shorts. And if we take a quick measurement here, so from that real build up of open interest up 36% on Pepe. Wild move. And price is up 70%. So you've actually not got an over leveraged market at the moment. And it probably does mean we've got fuel for higher as longs are just so undercrowded here that, open interest is half of the price movement, so that this is not necessarily a frothy market on the long side yet. You'd see this outpacing price if this was frothy on the long side. So, definitely some disbelief in this rally. Definitely a classic where crypto traders, they don't know how to get on board. And these rallies, they end just as quick as they begin. And they really take off. So, I'll be always using your system when it comes to Pepe. Again, you don't want to be FOMOing in here into any of these moves. But this does look like shorts are getting squeezed here, as open interest is still healthy. And eventually, when you reach some sort of liquidity target, you see one of these big drops in open interest that tells you the shorts have been wiped. When you start seeing that, that's likely when the momentum eventually ends. So you want to be watching your liquidity targets on Pepe. This is where short stops are going to be resting. And if you see a big drop in open interest at any of these periods, that's then going to be the big wipe. That's likely going to end momentum and can lead to price slowing down. So you want to be playing the momentum and getting out where momentum's gone. So this can be one way to take a look at that leverage market and help you take profit on any long positions. So that is altcoin rallies. That's macro. That's the leverage positioning. Now catalysts and risks. So been through the market analysis, been through leverage positioning. Let's go into what's going on in the world. And of course, it's the US-Venezuela conflict. That's all the rage right now, and these are the markets that you want to look at: Bitcoin, stocks, gold, and crude oil. Let's pull up that chart. Tonight on the CME Open, you want to watch how these charts gap up or down: gold, oil. What's the reaction to it? A lot of people have theses around what's going to happen. Is it going to lead to price going higher, price going lower? Everyone's become a macro expert. And one thing I want to say is, if you're not already trading oil, if you don't understand this market like I don't trade these markets, so I'm not going to have a PhD level thesis on how this conflict's going to affect the markets. I'm just going to trade the charts as they are. And I recommend everyone does this too, because a lot of people become macroeconomic experts, but that doesn't help you make money. And if you've never traded oil, looked at these markets before, then all you want to do is just watch and take note of their reactions. No point having some thesis of what it's going to do, some prediction. Does it react lower? Does it react higher to this conflict? Of course, oil up typically is an indicator that inflation is rising. Oil down, typically an indicator that we're seeing disinflation. So inflation actually, the rate of it is dropping. So that's going to be interesting. The price rises of oil, then that's the price of energy rising, and costs of goods and services. They all tend to go up in reflection to that. Businesses have to raise their costs since the cost of manufacturing is higher. And that can then have knock-on effects in the market if you're seeing those price rises. and that could affect the January FOMC. So a lot of implications around it. Don't get me wrong, it is a big event. And by alternative nature, if you see oil dropping, then that's energy going down. That's businesses' costs actually dropping. And then they've got more costs to reinvest, more money to put into the economy, to put into other companies. And that can help boost the economy if the cost of things are actually going down. So interesting to see how that reacts. How does gold react? Was it already priced in with that false breakout above all-time highs? That's what I'm looking at. Was all of this tension and conflicts already positioned for? Did insiders already know about it? Or was this really well kept? Was this tightly sealed information and no insider trading around it? So that's the reaction-wise what I'll be looking at. Of course, Bitcoin's up. Stocks probably going to have a similar reaction to Bitcoin as they typically do on the low time frames. Bitcoin's been the only one open during the weekend, so this gives you the best indication of the reaction, and Bitcoin's actually rising. So, are there shorts being squeezed here? Is Bitcoin the inflation hedge? That's what I'll be watching to see in terms of the stock market. Do we get that continuation higher on risk assets? Because potentially it's going to be more inflation if oil prices are rising, but who knows? Who knows? By no means am I an expert on this stuff. As I said, I'm a trader. I like to make money. I'm not an economist. I don't write about things and have PhD level theses. I want to build systems and have a great year. So that's what I focus on. And that's something I've learned over the years, to care less about all of these big events, news, and all these things that are going on in the world, because we can't change it, but we can react to it and trade off it. And that's all I am interested in. So watch these assets on the CME Open tonight. Now, trade of the week. Touched on this at the beginning of the video, so you guys in the Discord will know that after selling my Bitcoin, I've been reallocating slowly back into BTC in the long-term portfolio. So over here, you can see my allocations. You got one, and then number two over here. So 25% in Bitcoin, 75% cash in my total portfolio. So right now, I'm looking at the market, and there is potential for a short squeeze here, as I talked about earlier on, especially if we get above those inside weekly candles, we get above and stay above those equal highs I talked about. There's a potential that Bitcoin could rally all the way up, start filling in these weekly gaps. It would be a hated rally to this distribution zone. And if it gets to that distribution zone, I'm going to be 20 to 30R up on this position, which, as I said, is some traders' yearly returns. Absolutely insane. And the reason is because it's such a large position. It is my long-term plus trading portfolio, percentage-wise, to 25% of that I allocated. So price behavior is everything. If I see indication that this is more of a short squeeze rather than a recovery, I'm going to be more inclined to take profits, as if we go up to 98, 100K, 102K in 1 week or 2 weeks, and it's clearly a short squeeze, you're seeing open interest get wiped, you're seeing momentum start to fail at that distribution zone where sellers previously showed up, which it should show up. I want to take profit there, because I think a retest of the 80s is likely, even if that is going to be the peak bottom. So, as I talked about over here, get this chart back up, even if we do short squeeze up here, everyone's going to turn extremely bullish. Everyone's going to be like, hat, you sold all your Bitcoin at the wrong time. Hat, crypto's actually bullish. And that's when it, of course, tops out. And even if it's going to be the peak or bottom, markets tend to give retests. So it could go lower. It could actually then go to new lows and reaccumulate even more Bitcoin on the long-term portfolio. But if we are going to short squeeze up, I want to lock in 20 to 30R over here, and I can then reaccumulate when we come back to this zone over here, which again, markets tend to always give retests. What's this? This is a retest of this zone. And I'll show you so many examples over here where markets tend to set a low like this one, then give a retest before going higher. You got over here, support resistance retest, where you flip it, retest it before going higher. So many examples of the market doing this. You're not going to miss the move, at least sometimes you will, but more often than not, you're going to have that chance to get back in, because if it is a short squeeze, we get overly bullish at the highs, and people will want to sell there. Those who didn't sell their Bitcoin and have been patient and are waiting for a bounce to sell their cycle bags, they potentially will show up if Bitcoin goes back into the hundreds. And if it does it fast, especially because just a week ago, they'll remember Bitcoin was in the 80s. Markets have a memory. So based on price behavior, if we do move up, I'm looking to turn that into actually a swing long. So in my trading portfolio instead, and take profit and reaccumulate if we come back to these lows. Alternative to that is we don't break out, we just come to the highs and we continue this slow, low volatility recovery where I'd actually then be less inclined to take profits because that's more likely to actually be constructive and potentially build a base for a move to at least all-time high. Because that's cause and effect. That's your slow reaccumulation, your box breakout where it's actually not indicative of a short squeeze. And maybe that doesn't even happen. Again, maybe we do just then break down to new lows. So it's very price behavior dependent. Has to be signs of a short squeeze. What's happening here? But anyway, go back to this. Has to be signs of a short squeeze to take profit on that Bitcoin that I accumulated. If so, it's going to be 20 to 30 R locked in. Otherwise, I'll just hold it and we'll reassess the markets then. So could be a big one. Absolutely killer trade here if it does turn into that. It's one I had great patience with to accumulate that after selling all my Bitcoin. So slow moving one. No need to rush. No need to panic. Got my plans laid out and we'll play it as it comes. So in the meantime, there will be trades. Will be leverage trades, of course, going into next week. Scalps around those economic events as usual. So just wanted to share this as more of a higher time frame trade for the week and what I'm doing with my trades that I've been talking to you guys about in the Discord. So if you guys have enjoyed this video, help me out, drop a subscribe. We're at 673 right now, which is absolutely G. Appreciate all of you supporting the channel. Let's smash 2026 together. Drop a comment, drop a like if you did enjoy this video. That lets me know you're enjoying the content, and I'll see you in the next one. GM.